My name is Dan Weisskopf. I'm the ETF professor on X and also lead ETF strategist for the ETF think tank and portfolio manager at Title Financial Group. And for those who are ever looking to launch an ETF here in the US, please look us up. We can help you do that. So with that, I'm going to hand the mic off to David and we'll get started and welcome our guest properly.
How's it going, everyone? David Chikansky, fellow portfolio manager within the Title Financial Group. Very excited to have Marin Katusa on our show today, esteemed author of a book that's officially 3 years old today, The Rise of America, and also an expert and one of the largest financiers of publicly listed Canadian companies. And we're very excited to talk all things battery metals and just metals in general and how this ties into the whole AI story. How this might be like that next linchpin of inflation that we see if inflation is to continue. So Marin, if you wouldn't mind, please introduce yourself and talk a little bit about your past, how you got here, and maybe frame the conversation on what's at top of mind for you today.
Yeah, I'm born and raised in, I've got the benefit of being born in Vancouver, which at the time I had no idea till I was in my early 20s was the epicenter of finance for resources globally. Just the way they exchange. So after I finished my university work, I was teaching, and I was teaching calculus up at the university. One of my students' dad had a question that I worked on and answered it for him, and he wanted to have a meeting with me, and I had no idea what the hell tungsten was. And I said, this is interesting, and I started digging into it more. And that's kind of my first thing where I became known for was tungsten, then got into uranium in 2003 and 2004, and then just built up the brand at that point, making lots of mistakes and learning from the best and getting ripped off by the best. And then in 2006, I ended up partnering with, at the time, I wasn't aware of how big of a legend he was, but no man on the planet built more porphyry copper mines than him. And that was kind of my first start to finish of taking an idea to producing copper in, 5 years. And it became the third largest copper producer in the country, still produces today. And then just got into shale really early, and here we are today. So, you can see what I'm doing at katusaresearch.com.
Thank you so much. And again, we're very excited to have you on today. Let's start off with copper. What's going on with copper, right? We saw this huge rally in the last couple of weeks from a somewhat dormant commodity for quite some time. And it's caught everyone's eye, rallying alongside precious metals and other things. Is this the anti-dollar play, or is this the, oh my gosh, the resources for AI play? And I'll caveat that with saying that this past quarter, the negative performance of tech during the earnings period was pretty much on, and our R&D budget next year is going to be a little bit bigger than you thought, right? So is this the response to that?
I think it's also supply and demand. You look at 5% of the copper came offline mid last year, and ironically, that was a mine I financed 12 years ago in Panama. And, back then it was called Cerro Panama, Cerro Petaquilla, actually, at the time. Now it's called Cerro Panama. And, you look at what's going on, and here's the reality. Everyone's talking about higher costs across the board, right? You go to restaurants and you get, here's your price. And then you get this thing, a line item extra. I just got back from the Middle East and I was at the airport. I'm like, what the hell's extra? Did I order something called extra? It's everywhere, right? Well, guess what? You have COLA contracts, the cost of living adjustment in a lot of these mines. Tire costs make up 5% of your copper costs at a mine. Something you probably don't even think about. What about, your hydraulic shovels, your haul trucks? They're starting to wear out, so they got to go replace it. And labor, they haven't, Tesla hasn't figured out how to get rid of the union factor of automated truck, even though Caterpillar has figured out automated haul trucks. They haven't figured out how to get rid of the union factor of that. So all of the things you've mentioned, plus the reality of copper costs, plus let's look at why is BHP buying out Anglo? Well, because Escondida, who my dear late friend, rest in peace, David Lowell discovered in 1981, is one of the greatest copper deposits on the planet. As you get lower and lower, your grades are decreasing, but your impurities are also increasing. And the government wants more. So BHP, which owns half of Escondida, is going, we haven't drilled enough, right, David? They haven't explored enough to replace reserves, right? Your RLI, your reserve life index. And they're looking at it going, shit, it's probably easier to buy someone else. So you get consolidation. With consolidation, something nobody is talking about, and I've tweeted a lot about this, is TCRCs. So refineries, when, 2011, talk about luck. The day we shipped our first big shipment of copper.
Can you explain what a TCRC is first?
Sure. So it's a treatment charge and refining charge. So the smelter says, okay, we're going to charge you $80 per ton and 8 cents per pound of copper to refine it, right? That's what it was in 2011. And the reason I remember that was you do a 30-day settlement, because from Vancouver to Japan, who our partners were Mitsubishi, we would send our concentrate, which is about 25% con, to the smelter. They blend it with the dirty con, and then you get like a medium con, you run it through the smelter. But from port to port and put it through the smelter was 90 days. We get paid 90 days. But within that 90 days, Fukushima happened. And that's what I remember about the TCRC costs. And when there is low demand, TCRCs go high, because they got the choice of saying, well, screw it, we don't really need to push this through, right? So that the seller will take whatever they can get, but they really bend you over the barrel on TCRCs. TCRCs are negative now. They're paying you to refine it. This is the first time in my 22-year career I've ever seen this in the copper world. No one's ever seen this across the board. In addition, the Saudis are talking about building a smelter. Well, the Saudis are real. You don't mess with the Saudis. They're going to do it. Meaning they're investing in their future. The Chinese are investing. So, they're not going to just build more houses and, high rises and base on residential. They're going to build industry. The Japanese are still pushing forward with copper. So the answer, David, is all of the above. And, you cannot build a copper mine today at $4 per pound copper. It's not going to fly because of all the realistic costs. And these aren't like gold mines that like have 10 or 12, 13 years. Big porphyries are huge, massive, but they're so big CapEx. And they're so hard to permit. In America, there's an incredible copper deposit in Alaska called the Pebble Deposit. Good luck permitting it. I owned 19% of it. Me and my subscribers made a huge fortune on it. The problem is getting the government to understand what industry can be built about it. So you're not getting new deposits being built. You're getting consolidation in the sector. And the TCRCs are telling you that the people who refine the copper, there's huge demand for the copper. So this isn't just a de-dollarization. This is a reindustrialization. It's happening in real time. So the price of copper is real. Could it go to 425? Sure, but whatever. The point is that, there's strong demand for it.
So, Mayor, when you're approaching a new project, let's say, whatever it might be, it doesn't matter whether it's copper or AI or whatnot. When you're looking at a project, how do you look out into the future in terms of creating metrics so you know where you are in the journey? Because at the end of the day, what you're talking about are investments that you made a decade ago, right? How did you stay committed to kind of these projects when they were long use life, perhaps, or, you get my point, right?
You have to decide what type of investor you're looking to be. If you're a developer, on Copper Mountain, I was young. I was the youngest ever director on the Toronto Stock Exchange. I had a 5-year plan. And like a politician, I ended up writing that 5-year plan 3 times before we sold it. So you learn as you go. First of all, is the first answer. Second answer is when you become a developer, I've got a little rule of thumb. If you build it to sell it, you'll end up keeping it. But if you build it to keep it, you'll end up selling it. So I look at projects now that I want to own as a larger shareholder for my family's trust in moving forward, because the copper porphyries, there's a reason why the BHPs and Rio Tintos are cash cows and the gold companies struggle, because the margins on base metals are so much higher, but they get valued lower. But I look at political risk, number one, Dan. In my book, I talked about positive and negative swap lines. I'm just too old to bother pretending to be Indiana Jones. That was cool in my 20s when I'd put body armor on and, go to places like Iraq, Pakistan, or, Afghanistan to look at incredible deposits. I was there the day Kosovo declared independence and became a nation. I was the first mining company registered there. It was cool. It was fun. It sold newsletters. It's sexy, impresses girls at the bar. But you know what? My biggest scores were boring and right there in the backyard, right? So meaning places like Utah, which are the number one on the Fraser Institute for business for mining. Quebec, Ontario, certain places in BC. I'm involved with a company building a mine in BC, in Utah, South Dakota. Here's a perfect example, Dan. I'll give you a real time. Now, it was 4 years ago when we had the idea, but one of the greatest mines ever on the planet built the Hearst Empire, right? Everyone knows the Hearsts. And that was, in South Dakota, and just sitting there in the reclamation field of Barrick. So the greatest living one of the greatest geologists living today is a very close friend of mine named Dr. Bob Quartermain. He's in the Hall of Fame of Mining. And he partnered up with a really superstar named Jonathan Odd. And they knew how much I loved this asset, this historic, because I'm a mining history buff. I love writing about cool stories. And I don't know if you guys have ever watched, it's my favorite show, I think one of the best shows ever, called Deadwood. And the whole series is about this mine and the stories of this area in Deadwood, South Dakota. And it was just there. But do you think the geology just disappears because, in the 90s, the price of gold went down to $250 an ounce, $270, and this thing came underground. And when Homestake merged with Barrick had this sexy thing in Australia, and it was $270 gold. So the new management had new ideas, and the bankers needed new sexy things to sell, even though the history there, this thing was a cash cow. So during COVID, we were the first mining company to get authorized to leave, but there was no flights. So we had to put up a bond with the government, and I did that, and to get a private plane, which by the way was like 1/5 of the price today, and because there was no business. Now this is the depths, like the first month and a half of COVID, so everybody was scared to leave. And we went and got that asset, and today it's listed on the New York Stock Exchange as Dakota Gold, and it was just there. If you want to be young and aggressive, we understood the risks, the capex, and we cut a deal and we made it happen. So that's a perfect example. And my subscribers made a lot of money on that one. I'm still a huge shareholder of it today because I believe in that. So you got to have that perspective. In my game, Dad, I hate exploration. I love, there's an old saying in mining, the best place to look for a deposit is in the shadows of the head frame, meaning where there's a lot of gold, there's probably going to be more gold, especially if you use new technology. And what we did on basically my whole shtick 25 years ago when I started, was to go to all these old geos who didn't know computers. And my shtick was, I'll digitalize everything for you. My partner, who was a legend in the mining business that taught me a lot about managing a fund, he didn't know how to use an email or an iPad or an iPhone, or he's never put together a PowerPoint. That's not how they did it. And, he was old and he didn't keep up with it. So I went to these guys with experience and said, what can I bring to the table? At that time, I didn't have a lot of money. I didn't have a lot of experience. I didn't have that much knowledge. Okay, who cares that you're really good at math? There's tons of other people who are good at math. But I went to a niche and I said, let's go to these old deposits, bring modern technology, digitalize hundreds of millions of dollars of old data, like drill data, which is all analog, digitalize it and see what we can do. And I've done that over and over in the mining space and the energy space. So that's what I do, Dan.
Yeah, I know, and it's a great analogy to a bit of my experience. And I may be a little bit older than you because I remember you're familiar with Cripple Creek, right? In Colorado.
Yes.
Cripple Creek used to be one of the biggest gold mining areas, discoveries anywhere, I think. And at the time when I graduated from college a long, long time ago, we were 25% owners of Cripple Creek, which frankly was controlled by Hecla Mining. And all we wanted to see happen was gold go up, because then we could break even on getting the gold out of the ground, right? And then finally we sold out in 2008 to Anglo. Bad sale, perhaps. But we didn't know where we were in the journey, right? The company was losing a ton of money. But you've been through that with some of your businesses, right? You know, talk to us a little bit about that side of things. When you feel lost because you need to sink more money into this project, this business, when the visibility is just not there.
I'll give you real life examples on that. So first you have to ask yourself, did I make a mistake? Like, did we come across new information that proves maybe the metallurgy doesn't work, or did management interpret this wrong? Did permits prevent this? Or was it something that was not wrong, but, you know, on Copper Mountain, I'll give you a great example. We weren't wrong, but what happened was the guy, so to get large financing, you need a bankable feasibility study to build the mine. And because there's a boom time, you have to hire independent engineers. They're busy, and they said we would be done by January. Great. And it's a big study. You spend, I think we spent almost $10 million on it. But what happens is a SAG mill, you're a semi-autonomous grinding, these big ones. We have the second largest one on the planet, and we have the largest cone crushers on the planet. It's called the Rapture 2000. We're sitting there going, okay, well, we got to order these, and it's got huge lead time, but you have to wait to get, because they don't just, it's not like going to Home Depot and getting a carburetor or a pump. You got to order these, and you got to be in line, and you got to make your installment payments. But because that engineering firm screwed up and we caught a mistake, we were delayed by 6 months. But if we had to make that payment for the SAG mill, and the feasibility study came out negative, and we made that payment without the feasibility study because it came before the feasibility study would come, and it was negative, you as a director are liable. But if we didn't make the payment, we would lose our spot. You go at the end of the line, and we wouldn't get production until 2013, not 2011, because you got to get this huge SAG mill to site, build it, put it together, and go. So we sat there, we said, we're seriously screwed. And then Bear Stearns happens. And the price went down 90%. Share price went down 90%. I'm sitting there going, as well, all our shareholders, what the hell do you do? So me and the CEO, problem with my career is most of the guys I admire and been my partners, they were also 30, 40 years my senior. He passed, bless his soul, Jimmy O'Rourke. Rest in peace. We looked at each other and said, we got to do this. So we each came up with the money. And at the time, everything in my portfolio was down 90%. So I dipped into the equity of my house. I was a single guy, and I was a bit, I lived on the road. And I said, screw it. I spend more time at an airplane than I do in my house. And it became a 20-bagger. And the third largest producer in the country. So that's an example of, but you gotta take that risk, and you gotta make sure you've crossed your T's and dot your I's. And it was a very stressful period, Dan. Like, I was young, and I put everybody in my life into that stock, my best friends, my family. And it was extreme pressure where, for 12 months, why is the stock down 90%? Like, I don't know. The banks have blown up and China's messed up, but people take it out on you. But you gotta, if you believe, pick right, sit tight. But if there's something fundamentally changed, like management screwed you and they lied after they took your money, suck up the ego, cut your losses, take your tax loss, and move on.
Well said. Unfortunately, it sometimes sucking it up is the only answer. And people forget also that sometimes tax losses are an asset, because maybe we're gaining to realize thoughts like that. So I totally appreciate that.
Not only that, there's a benefit to just having an owner operator company where I always like to say that, like, they're the people who will almost do the irrational thing to save the business, right? That was almost seemingly like an irrational financial move for you to let's just leverage everything further, right? But that turned around and saved the business. And so without that connection, sometimes that never happens. If you want to comment on that, great. If not, I'd love to also maybe shift.
Skin in the game, guys. Like the resource game, I cannot emphasize, well, you don't need to have the experience I have. Pull up the management people. You can Google them online and look at their ownership and look at their cost base. And there's guys like Amir Dani, Tobias, if you're into lithium, he runs the largest lithium fund. Jonathan Odd, Ivan Bebek. These are guys who mortgaged, like, I know them personally because I've been their largest financiers over 20 years. One of those guys on the list, I won't specifically state, had $100 million in equity and was living on rent with his wife and had to hear, poor him, but I understood the wife chirping in his ear that they're still living on rent. And she was furious because he went all in. Me as an investor in that, music to my ears, because I know how hard the guy's working, but you do not want to invest in a management team that have no skin in the game, are collecting fees, and then lie to you and get phantom shares, and they're into it for options. And if it doesn't work, oh well, and they got 5 other deals. You look at guys like Bob Quartermain and those type of individuals. And it's easy. Hey, I didn't have that when I started out. There was no, quick look at someone's feed and know if they're idiots, or their social media and they're flying around in first class with their wives showing off. Well, easy no. But today you can find out so much within minutes what their cost base is. It's all right here in the power of your hands. It's the ultimate weapon. You just got to put a little bit of effort in.
So if you could, can you give us a little bit of your thoughts on the state of the uranium markets? Right, it's still near all-time highs in the last couple of years. Has kind of traded sideways a little bit this year, but where are we? How does this fit into the greater story of all this energy use that the artificial intelligence world is going to take? And how does it stack up against other options?
So uranium to me is a super easy place, but that doesn't mean, like, to me, I wouldn't touch anything in Africa. Like, if there's a French embassy there, avoid it. If the French were getting, you look at Niger, Namibia. Look, I get it. People hate me for saying this. I've been there, done it. Both of my books, I talk about uranium. When uranium was $17 a pound, I went to the founders of Uranium Royalty Corp. What better way to get a clip than not take mining risk? You know how expensive, like, take Cameco. I know the guys there very well. They've already built the highest grade mines, MacArthur River and Cigar Lake. And their OPEX, just to continue, is $1.3 billion. I filmed at the largest uranium refinery, my subscribers, it's on our website. We were the only ones ever allowed to film inside. That would be the equivalent of 1 billion barrels of oil a year. It's already built. To rebuild that would be tens of billions of dollars. Now you're telling me a group that get paid $30 million a year, an exploration asset, they've never built a mine before, they're going to do it in a way that no one's ever done before, are going to build it for $1 billion, but Cameco just said that their OPEX is $1.3 billion on built mines. Meanings, what am I getting to? I don't need to get sued by any of these companies. Know who the fuck you're investing in. Meaning, I think my whole thing in my books I talked about, America's still the largest consumer of uranium globally. It's 25%. They produce almost none because the price got so low. And Obama's administration, the DOE, to cover up for their reclamation on super sites, were selling uranium. America used to be the largest producer of uranium. They invented ISR, in situ recovery. And you look at that and you say, okay, Kazakhstan went from zero to hero in 15 years. They went from 1 million pounds a year to over 60 using American technology, ISR. But acid is getting expensive. You're looking at depletion of the reservoirs. You're looking at Russian influence. And the price has gone from 17 to 80 and change today, or I think it's touching 90. So if you want to play it low risk, you buy the Sprott Uranium Trust, which is just holding uranium. That's one way. You can buy Yellowcake if you're in the European and the London exchange. What I've always said, I want permitted, built, and ready to go at low cost. So for example, the company I was referencing that is everyone's crazy about and has a $6 billion market cap, they paid $35 million just in debt on their debentures that with no mine. Or you can buy something like Uranium Energy Corp that has $300 million of cash and uranium above ground. I think it's over 7 million pounds of permitted, that's per year production, of permitted facilities with resources permitted. No debt, and all of their assets are in Wyoming and Texas, built, ready to go. And it's listed on the New York Stock Exchange, and it trades like water. It's super liquid. Why do you need to go to Africa when you could get the same gain on that stock there? That's how I'm playing it, going, you don't need to go down the food chain. It's there. Or you can do Uranium Royalty Corp. Open disclosure, I own both. And I'm a huge believer in both management teams. These are guys who've been in uranium for 30 or more years, and their whole net worth is in the companies. That's what I like. And it's cash flow. There's no debt. They don't have crazy debt that's crippling the company. They're not doing anything stupid like sponsoring hockey team helmets and football stadiums and Formula One racing. What the fuck's that about? So I think uranium is real. That doesn't mean these exploration companies going to places like Africa. How the hell is a Canadian geologist sitting in Vancouver going to have an edge over a Chinese or Russian company that don't play by the same rules in Africa? Know your risk, play within it. Stick to Saskatchewan and America. Stick to resources and management teams with skin in the game, permitted built facilities, cash flow. That's my take.
Marin, you posted something that intrigued me on X about hyperscalers now spending more on CapEx and the energy companies. I get that there needs to be something like $50 billion invested in infrastructure for AI really to be built out by 2030. But, where is this spend going to come from? And how are we going to support it in the way of electricity?
Yeah, so great question. It all comes down to cost of capital. The reason why the utilities companies couldn't do it, because the cost of capital was too high. And the permitting regulation was, difficult. Now you got Silicon Valley with a much lower cost of capital. And now they've made Elon Musk and, his name just slipped me, the young guy from ChatGPT, what's his name? Who's the chairman of Oklo. I had a call with Oklo and that whole team. They've made nuclear cool. They've made uranium cool, where these old crusty utility guys, they can't talk to the investors. Look at Oklo and what they're doing on their, it was the most successful SPAC since the SPACs blew up, right? And you have the whole Silicon Valley is like, yep, nuclear is cool. right? And basically the whole thing for 30 years, or, when uranium was $17 a pound, and I was banging the drums on this in my book, everyone's like, no, nuclear is dirty. COP was like, no, nuclear is dirty. Now, isn't it kind of interesting that Bill Gates is invested in it, and now COP is like, yeah, nuclear is cool. Okay, cool. But the point is, it's just a rational investment. So what's going to happen with SMRs is basically what you're asking. Will this be the secret solution for everyone? First of all, nothing's been permitted moving forward. This is not a new technology. Dan, SMRs have been around for a long, long time, different variances of them. The ability, whether you want to go to CRISPR technology or how you're going to refine the uranium, that infrastructure needs to be invested in, but never bet against American ingenuity. I'm a huge believer in that. And the industry is efficient. They will figure this out. It's going to take longer than expected, right? And there's going to be a transition period. There's going to be, the key to an energy matrix isn't just nuclear. It isn't just green energy. It's a diversified source. This is why, green energy, a key component of that will be utility scale storage. And I have a chapter about that in the book. And what does that mean? Well, at nighttime, the energy created during the day from the solar panels will be stored and used and distributed with those utility scale batteries. It's happening in real time, and costs will decrease. Just like solar panels 15 years ago were very expensive and they decreased in cost. That will continue because industry ingenuity. But the nuclear game of the old huge capex, huge overruns, that's going to be very difficult to move forward down. But I look at it going, why do I need to take any of that risk? If you know what you're doing, I just got to look at the current utilities. Let's pretend the industry. In 2019, I wrote a piece going, if I can write the worst possible scenario, a short report on nuclear and uranium, and if I can find an investment that still makes money in that scenario, everything else is great. So that's what we did. Now, I only own 2 uranium stocks, and I've spent 20 years in the industry. You don't need to have that much exposure in it to do very well. Don't own 15 exploration companies and thinking you're going to do well. The 2 top performing ones are with resources and cash flow. Remember, it used to be super high risk, high return. That's not true in the resources because the big funds, like Dan, your funds, they can't play in those little juniors anymore. The rules have changed. So stick with the best, lowest cost producers, permitted, stick with the right management teams, and that's how I think it's going to play out.
Thank you. And what about lithium, right? Lithium has actually gone the other way. How does lithium fit into this whole story? Obviously, we know it's very big for EVs and batteries in that world, which has underperformed this year. I think Toyota has outperformed the whole bunch with their hybrid cars. So there's been a little bit of a chill on the EV space, but I know this is also important for all of the facilities, data centers, et cetera, in the AI space. How does this fit into your equation, and why have we seen the lack of performance in this space versus some of the other energy producers?
2.5 years ago is the number 1 performing space in the whole planet, right? So it had an incredible boom. And what happens is, just like I wrote in uranium, with the cut to kill strategy that the Russians and Kazakhs deployed in the uranium. What do I mean by that? So uranium price went from, $70 at Fukushima down to 40, then down to 17. But yet the Russians still made money at it. How the hell are they that much better of operators in the West? No, it's an FX. It's a currency game. The tenge, the currency of Kazakhstan, it devalued so much faster than the price of uranium, and they produce in tenge. Do you want some tenge? David, how much tenge do you own? Probably none. But they wanted US dollars. So they got US dollars for that because they wanted to get their money in USD, real currency. So they kept producing more, depleting their reserves. And the same thing is happening in lithium now because lithium got so high that the Aussies and the Americans said, hey, we can start investing in this, and let's divest from the Chinese refinement and getting LCE and LCH from the Chinese because lithium's now high enough that we can guarantee it. So the Chinese have also done a cut to kill strategy, just like the Russians and Kazakhs. This is a very common thing in resources. I just nickname it cut to kill in the book because it sounds better than, talking about the technicals. But what they did was they just flood the market. And then they go, oh no, all like Lithium Americas and all the different mergers that happen, they start licking their wounds. And then the Chinese are trying to do deals to prevent the infrastructure. Now, what I think is going to happen is there's going to be, just like there's happening in uranium, just like there's happening in copper, you're going to bifurcated markets. Do you really want to focus on lithium supplies? Or if you're Tesla, or if you're a big Japanese, or say you're Panasonic, who's trying to get into the utility scale storage batteries, are you going to rely on China for your own destiny? Fuck no. You're going to want to develop your own side. So right now, the infrastructure set up for the salars, that product to go to China. But if you look at spodumene, which the industry is going mad right now, and again, don't go into exploration. This stuff has been around for 100 years. Remember, all the crazies and people with medical imbalances, they needed lithium. During the bombs, lithium. The Department of Defense in the 40s spent hundreds of millions of dollars exploring for this. So all I did was I looked at the best, highest grade deposits near port, near rail, at surface that would become the lowest cost producers that the American government drilled out for you. So you don't have to spend your money, use OPM, other people's money, the government money who drilled this out. So David, to answer your question, I'm a big fan of spodumene, but only in places that have mining, like the Northwest Territories, where there's all those diamond mines are going to shut down and they have thousands of people who are in mining, and mining's the biggest GDP. Companies like Lyft, those are the guys I would go to. And guess what? The biggest lithium fund, the smartest investor in lithium, a guy named Tobias out of Germany, 20 years ago when he started out, I met him and he was lithium his whole career. And if a guy like that is doing it, now he gets into the metallurgy and all the details, which is important. But sometimes you want to follow the real smart money and the management team, de-risk. And I think certain areas in Canada for spodumene, that's the place where I personally put millions of dollars.
I know you have to go pretty soon. What are the things right now as investments that you worry about most? And then also opposite that, what is your biggest bet now for the future?
My biggest bet, oh boy, I would say gold, copper, uranium, lithium, I have very significant exposure in. I'm a big fan of geothermal because I believe they're bringing in that energy transition of all of the incredible drilling techniques and data are going into geothermal. I've been involved in 3 geothermal plant construction. I'm on my 4th. I really like baseload power. I think carbon credits, Dan, are something that are so misunderstood, both the compliant and the voluntary market. I think interest rates are huge. I just got back from the Middle East, buzzing, and if you look at the economists, they're telling you every reason why we're in a recession. One of the guys in my office went with his wife to Nashville. He said he couldn't get anything. It was buzzing. Another guy was in Vegas, buzzing. I was in New York just a little while ago, buzzing. Maybe it's a bifurcation of just the fun places and the busy places are busy and the rest aren't. I don't know. Maybe people are tapping out on debt. But I think interest rates is one that, could be here higher for longer. I don't know. But eventually that's going to, you think about where we are right now, to me, it feels like 2006, 2007 with that 18 months. Remember when Greenspan back then, well, I had lunch with once. I'll tell you a cool story about him. I said, okay, Mr. Greenspan, he's really old and, he's there. And I go, if you had your option of a perfectly diversified portfolio of cash and gold, what percentage would it be? And he goes, oh, that's a really complicated question. And where am I storing my gold? And I go, you're the fucking head of the Fed Reserve. It should have been an easy answer. It should have been 100% US dollars. And for him to say that, and I wrote about it back then, but the point being is, at that time when I had lunch with him in 06, people forget that was 18 months of higher for longer. And then what followed, right? The mortgage fiasco and then global financial crisis. I wonder, the big risk is if we get into that repeat of 2006 with 18 months of higher for longer, it's going to wipe someone out. And the government is changing the rules. Remember, like, student debt was supposed to be illegal to disappear. They did that. What happens if they rewrite the rules on debt? I don't know. Like, it's the government. They can do whatever the fuck they want. So I'm looking at all these things going, that is the one that worries me the most, is where's the puck going, as a Canadian would say. And if higher for longer is around, what's it going to blow up? And it could blow up the private sector debt before it blows up the public sector debt, in my opinion, because, the government has an army and they can fix the rules on taxing. The private sector doesn't have that. And at the end of the day,
S-REIT just limited redemptions to 33 basis points a month. They're like, I know we were supposed to do 5% a quarter, but we're just going to do 1% a quarter from here on out because we don't have the money, right? So
I'm with you.
That's crazy.
Well, thank you. Although I think you've got to go.
Have the jet,
and we appreciate the time, and we respect that you have to go. And let's keep the dialogue going, my friend. This has been a lot of fun for us.
All right, guys, take care. Stay well.
Thank you so much for the amazing information. Thank you.
Thanks, guys.